Today we're going to talk about the concept of dual entry accounting. But before we dive into that, let's review our accounting equation that we learned last time. Our accounting equation says that assets equal liabilities plus equity, where my assets are items that the business owns or controls that will give benefit to the business. Things like cash, amounts owed to us by others, supplies, buildings, equipment, etc. are all assets. Liabilities are amounts or services that the company owes to others, things like loans or unearned revenue. Whereas equity is the residual interest that the owners have in the company. Accountants record transactions or events through journal entries. Here's an example of a journal entry to record an entrepreneur contributing $75,000 cash to start a business. And this is what we're going to talk about today. So journal entries have two sides. Every single entry has two sides. This concept of two-sided entries is known as dual entry accounting. The left side of the entry is our debit side, whereas the right side is our credit side. If you have a bank account, then you have heard the terms debit and credit, but I want you to throw out that information. Debit alone does not mean increase, decrease, good, bad, add, or subtract. Debit simply means left side. Credit, likewise, is not synonymous with increase, decrease, good, bad, add, or subtract. Credit's just my right side. Accountants sometimes use what are known as T accounts, and a T account represents a ledger account, and it's used to show the effects of transactions. So it's literally just that. It's a depiction of an account with a T. At the top of the T, you have an account title, and on the left side, you have all of the debits to that account, and on the right side, you have all of the credits to that account. If the total dollar amount of debits exceeds the total dollar amount of credits, then the account has a debit balance. On the other hand, if the total debits are less than the total credits, then the account has a credit balance. Let's look at an example. Here we have a cash account, and our cash account has three debits. So on the left side, we have $7,000, $3,000, $6,000 for a total debit of $16,000. On the right side, we have $2,000 and $5,000. So our total credits are $7,000. If I take the total debits, $16,000, and I subtract the total credits, $7,000, I have a balance in cash of $9,000. Cash has a debit balance, left side, of $9,000. This is because the total dollar amount on the left side was more than the total dollar amount on the right side. Double entry accounting helps us keep our accounting equation in balance. And remember, that accounting equation has to balance. This means that each transaction or event will be recorded by an entry, and each entry will involve at least two accounts. At least one account must be debited, and at least one account must be credited. Our total dollar amount of debits must equal the total dollar amount of credits. Otherwise, our accounting equation would get out of balance, and we can't have that. So, assets equal liabilities plus equity. Let's look at this in T account form to discuss which items are increased with debits and which ones are increased with credits. Here's our accounting equation with T accounts. Assets are on the left side of my accounting equation, so it follows that they'll have normal left side or debit balances. So to increase an asset, we will debit the asset account. This is just like that cash account we just looked at. It had a debit balance of $9,000. That's normal for our assets like cash. So assets increase with debits and they decrease with credits. Liabilities, on the other hand, are on the right side of that equation. They're to the right of the equals sign. So a credit increases them. They have a normal credit or right side balance. If I want to decrease a liability, I'll record a debit to that account. Equity is also on the right side of that accounting equation. So credits on the right side increase equity, and they have normal credit balances. Debits will decrease an equity account. But let's look at this in a more complex manner. You know that the expanded accounting equation is actually assets equal liabilities plus common stock, or the owner's equity that the owners contributed, minus dividends plus revenues minus expenses. So this expanded accounting equation has equity broken out into its four components. Common stock and revenues are added because they increase equity, whereas dividends, which are my distributions back to the owners, and expenses decrease my equity. So they're subtracted. In T-account form, this is our expanded accounting equation. There are no changes from the previous slides with the assets and liabilities. So let's just focus on equity here. The two items that increase equity, common stock and revenues, have normal credit balances. They increase on the right side because they increase equity, which is increased on the right side. So common stock revenues will have normal credit balances, and to decrease those two accounts, we would debit them. On the other hand, my dividends and expenses, which actually decrease overall equity, will increase with debits. They have normal debit or left side balances, and a credit to an expense or dividend account would decrease it. So again, equity overall is increased with credits. So the two items that increase equity increase with credits. But a debit decreases overall equity. So the two items, dividends and expenses, that decrease equity are increased with debits. You might be overwhelmed right now. And if you are, that's okay. It takes lots of practice to get this down. And here's a little tip to help you remember which accounts increase with debits and which accounts increase with credits as you're learning this. And that's dealer. We're going to divide the word dealer into the left half and the right half. On the left-hand side, we have the letters D-E-A. Debit means left side, and debits increase dividends, expenses, and assets. On the right-hand side of the word dealer, we have L-E-R. Credits on the right side increase liabilities, equity, and revenues. So I hope that dealer helps you remember this. Don't get discouraged, though. It takes lots of practice. And if you need help, please feel free to reach out to me. I am happy to spend some time on this with you.